And hello there. This is my radio voice. Welcome back to the show. DayTraderRockStar here, and we're going to do a little after hours video market radar for tomorrow and the rest of the week, just to kind of keep us up to date on what's happening. So moving closer to the election. Great day today. If you look back at the chart today, it is an amazing session when we talk about the Rambot and the tradeometer. I mean, that is the key here today. That was the talking points. I was amazed myself. Even after the after hours today, we came up here. This was 3:15. This was at 4:30 on that pop into the Apple earnings, and then we dropped off and we made new lows, and all of a sudden we had a setup here. And look at, we bounced right into the close. Each one of these setups are triggered on the dashboard, on the DayTradingRadio dashboard. The yellow ones are the Rambot. The blue ones are the tradeometer. The combination of those are the super signals. There's other things out there that we're working on. And you know what? It was a fantastic day to follow the markets here. There was a super signal here right around 12:15. It was a really nice one. There was probably, you might even consider this one a super signal up here because of the you have to start to move back to get that rotation and to get that signal on the divergence. You have to actually drop out on the price and make sure that the stochastics are holding up. So this was actually probably a super signal also. I just didn't mark it down as one at that point, but that's what we're looking for. The combination of the Rambot and the tradeometer to line up at the same time. We're within pretty much a 5-minute span. We haven't really decided what time frame we're going to use on that, but we're working on that. Right now, the after hours market here, Apple actually is the key. Let me bring this up for you. And again, this is live. So this is Apple right now. We're trading down at 115. It spiked up to about 122 and then came back all the way back. We did have Panera after the close too, and we took profits on that. That continues to hold up at 205 area. But we got out at 207 and change, and this time we're not making that mistake of holding overnight. In this case, I didn't have options to have common stock, so much easier there. Those out there with the options here, it's frustrating on moves like this, and I honestly, if you look back at the if you just look at the overall markets, SPX here, and I'm actually going to show you the SPY instead, because I think it's an easier look here. Now this, you're seeing this hourly, and you can see this small little consolidation box there. But if you look at the daily, that box is inside of a bigger box, and that box, I just marked it off here, but we could actually tighten it up a little. But you can see this tight consolidation, a lot of chop there, a lot of chop, chopola, choparita, chopamole, but right now it's kind of. And I was talking about this today. If you were just trying to trade this market on a kind of a swing basis, this is the this is the S&P 500. It doesn't mean that every stock is acting like this. A lot of stocks like Amazon, Facebook here continue to move higher, but the majority of the stocks, just by the index, looking at the index, you had a tremendous amount of chop. And I was going over this today. I was like just going back at taking a look at the candles. You have a down day, up day, down day, up day, down day, up day, down day, up day, down day, down day. But basically, it's just chopping around sideways. And then we broke down here. There was some I think Stanley Fisher made some comments back here, this candle right here, and it was also overbought. So we rolled over, and then from that point on, we've chopped up day, down day, up day, down day. Up day, down day, down day, down day, up day, down day. It's just the same old. We're staying in there, saying we're heading towards the election. So I'm expecting this to continue to play out. It just you have to go with what is the obvious here. Does the market have a reason to run before the election? Is it a done deal? I don't even know how the market's going to react. People, one of the most probably interesting questions we get here at DayTradingRadio is, where's the market? How does the market react for a Hillary Clinton win versus a Donald Trump win? And I tell you, it's up in the air. First of all, the polls are a big scam. We know that. Media coverage is a big scam. We know that. Both of the candidates have flaws. And it's really, you can't get into you can't really, argue with anybody for choosing one person over the other. It's just the, and that's the important thing. It's just kind of keeping your cool. The election seems to be dividing the country. And not to talk anymore on politics during this video, it's just the way it is. And we have to look for continued consolidation, or if anything, I thought maybe a further pullback, just based on not knowing what the hell is going to happen. So we have the upside bias, which, with the market hanging in there, is telling me, hey, you know what? We're probably pricing in something. We're probably pricing in right now. The polls are telling us that Hillary's going to win. But I don't believe those polls, honestly. Honestly, I do not. Just like the Brexit, and everyone thought the Brexit would never happen. That happened. We've been talking about the different polling sites, and it's just, it's up in the air. I'm not putting anything past anything. I understand both sides of the story, but I also, it's frustrating, and I want to make money. And that's what I'm waiting to do. But it's just, you can't go into the market confident on a long-term basis. Or, it's basically we're going to try to concentrate on the short-term time frame. Now I see Apple here. I mean, Twitter popped after markets. I didn't notice that until right now. I just noticed that Twitter popped a little after 6 o'clock. Must have been mentioned on Fast Money or something. But it popped up to 1820. It's pulled back to 1793 right now, but it is popping up here a little. Now I have some calls on Twitter. They're out of the, out of the money, but there's something that's happening right there. So going into this, going in and taking a look at the markets going into midweek Wednesday. We look at the multiple time frames. Daily here still positive, just because of the directional slope here. The hourly, well, this has been a key for us, and and I don't know when people are going to start believing and just paying attention to the signals. And even with those signals, stochastics here, the greatest indicator ever. On the short-term time frames, when we talk about these tradeometer setups, we know we get our bounces when we get these fast rotations. We see it. It's just being on top of it and having the confidence to take it. I mark these off here real time, and you have to see that counts for something, right? It does. I was extremely excited today watching this market, and I don't take all these setups, and I'm in a situation where always behind. I'm always behind. I'm looking at something, I see the setup, I try to explain it, and by the time I'm done explaining it, it's already popping up, and then I second guess myself. And one point today, and not to throw Paddler under the bus, but I got into position here, and then it was, there was comment. I said, did I chase this? I felt like I chased it. Ended up getting out, and it ended up working out really well. My own fault. Never blame anything on anybody. You have to make your own decisions. But I'm happy that the tradeometer and the super signal worked out even beyond, because he made a great call yesterday. And what was interesting about that great call, he looked for a pop, you expect him to make another great call. So he said, we're going to drop out here. So we'll have a super signal. I want to take this because I have to have confidence in the signal. Either way, took it, but got out, didn't let it run. And we could see, after all, it did make a nice move. But that's a game we all have to play. We all have to deal with that. That's my fault. But then we come back and we take a look at the other signals here, and they're all just spot on. They're just spot on. We're on to something big, and it's just about the confidence. It really is, and being there at the right time and being on top of it. It's unbelievable. Just it's crazy. I want to get on here and really scream. God damn it, I'm not taking it anymore. All right, so the purpose of this video is actually to do a market radar, and we talked about the market radar. The market radar is really a radar of what we see. It's like a forecast. So I want to go over those time frames, and now that we have the SPY, which tracks the S&P, so if we take a look at the S&P, we're basically going to have the same thing. The SPY is a little bit different, but we have the SPY actually pulling back. S&P cash here, almost oversold. It's actually started to turn back up. I want to go back to the SPY I always pay attention to the SPX, but the SPY is actually oversold here. Take a look at the last times the SPY was oversold. Let's go back all the way to October and look at the 60-minute time frame. And it's underneath the 20 line here. Did we have a bias to the upside? Yes, we did, until we got overbought. It came back down. Didn't really get oversold here, but we started to turn back up. Did we have the bias to the upside? Yes, we did, until we got overbought. Got back into oversold level here. A couple of days, it started turning back up. Did we have a bias to the upside? Yes, we did. We didn't get exactly overbought before it dropped back down. Got back down here, crossed back up. We had a nice bias to the upside until they oversold. Here we are back down into an oversold level. It chopped around a couple days, and then we started rallying back up. Bias to the upside, yes, we did. We pushed a little bit higher. It's not giving us a tremendous amount here. You know, this is looking at the SPY, and you're not even getting really a point off of some of these moves. But you do have a little bias to the downside or to the upside. Here we have the overbought level. We said be careful going into this. This is turning over, and yes, we did have that nice turnover. And this is a pretty good turnover. This is nice. This is a that's a what do we got here? 0.5% move. About 88 cents. 88 cents from the highs and low. Not a big move on that rotation. That's a 60-minute rotation. 88-cent move. You know, I wouldn't expect. You know, that's chop for you. That is what we really are talking about, is to chop. 50 cents here, 40 cents pullback, 50 cents pop, 80 cents pullback, 40 cents pop. And a lot of people are like, well, all right, I want to go in for I want $1 on this side, $1 on that side, and they get 80 cents. They hold up. Next thing you know, it's pulling back. You know. So that's where we leave off on the SPY. Let's take a look at the SPX and the futures. You know, you could get these. You're definitely getting upside momentum, a little bit of move on the momentum on the hourly, which tends to give us a bigger move on the futures. More leverage, more gain. But we're not exactly oversold here, and that's kind of a little warning sign. When we start to flatline here and we don't start, it can easily turn back up. I mean, our ultimate setup is here. This is our ultimate setup, and I'm going to show you these on the chart. And I decided now when I do my market radars, all I'm going to bring you is divergences. Because as you can see on the 1-minute chart, when we look at the tradometer and the Rambot, that's what we're picking out. So we might as well pick out just winners. You know, let's not go with anything else. Let's just go with winners. So along here, this is a great example of what you want to be trading, this type of setup right here. And from that point, that low right there, you can see we've been grinding up. Yeah, we've moved up here and pulled back and moved up and pulled back and moved. That's the thing. But the object is to understand the divergence, get that first move, always react with your criteria of exit on your time frame, and then let things play out. You know, so do we have a divergence here? No, we don't have. Is it a great setup like it was back here? No, it's not. We're getting 2 weeks away from the election. Who knows what the hell is going on? You have to go into the election with caution. You got to save that cash. You might have a great opportunity with this election. You know, I don't care if the market's crashing or ripping. You have to be ready. This seems to be the big news today. The individual healthcare plans rate hikes. New York City or New York is going to be like 20%. All the way Arizona, Oklahoma, Tennessee, over 50%. In some cases, over 100%. I mean, you have to keep up with we have to keep up with inflation. We have to keep up with all these rate hikes. You have to wages don't you know? There's something that's off key here, and eventually nothing's, you know, this is not going to work out. Right now, that's just you know, you get this continual drain. And I don't know what you're going to do about healthcare. You know, I can't solve that problem. I can solve most of my problems, but I'm not going to. I don't know what to do with that. We get back to the markets here, and again, kind of a neutral. You know, I would say with the market radar tomorrow, daily is positive. The hourly here slightly negative. You know, when I start to see that flat line above that, I've seen this thing here take another step down. But I'm not going to make a call on that. 5-minute time frame. If we look back at it, great, a little move there, great pullback. Being on, you know, what I stress is being on the right side of the momentum. I don't care what trade you're taking. You know, unless there's individual news on that individual stock, it's better to be, going upstream or going downstream with the river, not rowing against the current. What I should have said is row with the current, upstream or downstream. Go with the tide. The tide is moving higher. The tide is moving lower. It's very easy. This is your tide charts right here. All right. And once it starts to get choppy and stuff, well, slack tide and all that other stuff, pull the boat in and sit this one out. So not the best setups, but I have better stocks for you. All right, so let's get into the stocks right now. I've been going over some stocks right now. I have a few on deck for you. All right, Lockheed Martin was a newer HPS setup that we set out on Sunday. That was like kind of our new addition to the list. And I didn't get it up on the... Let me get it up here. Oh, hold on here. I hear something behind me, like these, I don't know what it is. It's pretty scary. It sounds like Them. You remember the movie Them from like the 1950s? It was like these ants that lived in the sewers. This high pitch squeal. There's like something outside my window. It's kind of like very high pitch. I think it's the ants. They're gonna start coming in the window. I don't know if you could hear it. You must be able to hear it, because I could hear it on my headphones. Just interrupting this video, we just had a member in the room here, setting up his charts. First time, I guess, maybe a beginner trader, or maybe a first time setting up his charts here. And so we're going to go over that with him. I'm going to do it live with him, so I'm going to let you guys listen in. So we use two charts. I use two charts here at Day Trading Radio. When we cover the futures chart, we're using the Medved Trader, which is a great program, great product. Jerry Medved, put this out. This is like the second coming of Quote Tracker, and an awesome charting program. We track the S&P here strictly with this. The S&P, we track it with the S&P futures contract, the E-mini December contract. We just move the contract when it changes. I also have the other charts up here. It also follows stocks and stuff. But when we look at the ES, I have a set of stochastics here. This is all I'm paying attention to. We have our moving averages, we have our volume, and our stochastics. We'll start with the moving averages. They're standard moving averages, the 20, 50, and 200 exponential moving averages. A little faster than the simple moving averages. The 20s are great for trending. You can see the 20, 50, and 200. We have techniques that we use off of them. We have the videos on the playbook playlist for those, those techniques. I think the more important things are the stochastic oscillators down here, the bands here. They're all, actually one's a full. The fast stochastics, the original ones that were developed in the 1960s by George Lane, they were fast. Over time, they were able to modify them, and they modified them with the slow. They added, the moving averages to them, and they have the full stochastic, which adds a variable that you can actually change. I prefer to use the fast stochastic. So when we use the fast stochastic, the default normally is 14.3. We tend to use the 9.3 a lot more. And the 9.3 seems to be giving us better signals, but I keep them both on the screen. So the top band here is the 14.3. The bottom band here is the 9.3. The middle band we call the medium speed. Here it goes back 40 periods. It's the 44 fast stochastic, 44. And the full stochastic, 60, 10, 10. This is something I also use my trend identifier. Now, there's so many people who could use different time frames and stuff. You got a lot of things. These are things I've spent years trying to tweak and stuff, and we have certain setups for this. I don't pay attention to the full, only for certain setups, which we call, triple stochastic flag setups. And I have a lot of videos on those. They've been setting up quite a. I didn't pay attention to those today. But if we look back over the last couple days, you'll see a few of those. Let me see if I could actually identify a couple of those to you. I think they were mostly last week. I'm going to have to go back. If I notice they're happening, I'll point them out. Here was one right here. So we have that rotation on the fast. We have an embedded stochastic here on the medium, and we have a rising one or an embedded one on the full. And that situation with a flag tends to give us a continuation pattern. If the slow is as the full is heading up or above 80, the medium, which we call the 44, is above 80 or hanging right around 80. This is, we tweak it as we go, but this is kind of a setup. Whenever you see a flag, this is typically the setup you'll see. So when you recognize that setup, you want to go back and just say, hey, I know this setup. I've seen it. This is one of the setups we've seen over and over again. Same thing on the downside. If we have an embedded stochastic, and the fast rotation, you have this bearish flag. So the slower moment or the slower stochastic here, really the trend, and it hasn't really bounced. It's continued to be weak. The medium here continues to be weak. The fast rotation gives us that flag, and then the breakdown of the follow through as it rolls over. So that's why we use the 3 stochastics. The other stochastics we use here are, we use them for divergences and other things, but overbought and oversold. But as you can see from this earlier video, when you review this video, you're going to see that the easiest rule to go by, and I was just explaining this using the other charts, and the other charts we use, and I'm using TC 2000 charts. Now you could use many. There's so many different charting systems out there. Telecharts, whatever. But we're more talking about the indicators. Now, when we look at stochastics on the cash chart, when I look at this chart and I cover the cash chart, I usually only have, when I look at this is TC 2000 charts, I have just the 9.3 here, the 9.3 fast stochastic oscillator here. We call it the Rambot. Volume is on there. It's just not showing up here on the cash. And what else we have here? And this is all about divergences too. This is great. This is our textbook setup right here. This is so good. This higher low, the lower low, reversal candle. That's what we search out. I was thinking today, I said, all right, now I'm going to start doing the research for the stocks. I want to show you the stocks. And I said, you know what? I could show you things that we're in. Or we could just always concentrate on this setup, because this setup is like getting, you're splitting the 8s against a 5 on a blackjack table. It just increases your odds so much once you have a great setup. This is a 3-in-1 count at baseball. This is, take an analogy and put it the best, put everything in your favor. It's not 100%, because nothing's 100% in the world. But the odds are everything coming around like a divergence like this. This is why these things work out, and they work out for a certain amount of time, and then you have to realize, hey, I've milked this cow. It's time to go to the next one. So when we do the, I'm going to show you some stocks now. Hopefully that answers your question. But again, on that, even on the cash chart, or on this chart here, the 9.3 fast stochastics, the 2050 200 EMA. A lot of people use other things. You could use Bollinger Bands, you can do Fibonacci's. Every so often I'll throw a Fibonacci up there to see if everything works out. Trend lines are important. I think learn the basics, the 1, 2, 3 patterns. And whenever you have a 1, 2, 3 channel pattern, the price comes down to and it gives you an oversold level. That has been the most reliable setups for bounces and staying with the trend. Very simple concepts like that. Divergences, you knock them out of the park. Take them all the time, because that's why you come to work. And those simple rules, that's why we're here. You can't come sitting down at the table in the morning and just go randomly get into something, especially in the morning. You will win, you will lose. But if that's, it's not the game. That's not a professional game. And market's not easy. It's not. Fibonacci's work great. The RSI, Relative Strength Index, is great. The MACD, I think, is very similar. You know, the RSI actually came. What I read about the RSI and stuff, that George Lane actually had something to do with that also. If you dig down and look at that. And there's other indicators, a lot of them. You know, if the market's going to go up, you want your indicator telling you it's going to go up. That's the best. That's the final say right there, right? If you could put what I want people to do is do what we do here at Day Trading Radio. You know, I want you to put a circle in when you get an alert, and when you say you put it down, because you can't take that away. After you look back at it and you say, all right, we had a buy signal there, I put it in there, I explained why. The market made a move from that. We had a Rambot 5-minute sell signal here. Look at that move. We had a buy signal here. Look at that move. A dual stochastic setup here. Even when some of the members said, hey, this is not a good spot, we're going lower. Look at the move. Yeah, and I'll put it here. And if it moves against it, I'll take it on the chin. But the majority of the time, you have to be a part of this, or else you're giving it up. You're just not going to make it unless you have an edge. And this is the edge. Could we do it every single day? I'm pointing it out. Every single day I'm pointing it out. I'm not putting this after the fact. I'm putting it in. I was like, Jesus Christ, should I put this in? I better put it in, because if I don't put it in, I'm not being true to it. But it's hard. It's still hard, because the leverage, you're traded with a certain amount of, cash flow. It's not going to be hard for everyone, but it is hard for people, because you're dealing with money. And once you deal with money, you second guess things. It becomes different. That becomes easier over time. But, this, you look back at it, That's why it's so easy here, I think, at Day Trading Radio, because we have nothing, there's no smoke and mirrors. It's obvious. We try to work as a team, understand why we want to, and the discipline. That's the part of it. That's the hardest part, is the discipline. Understanding, all right, we have a divergence here. We have a signal. It popped. Am I going to be greedy here? I think this is going to be the bottom. No, the stochastics are rotated up above 80. There's a better chance of a pullback here. Yeah, look at the pullback. Even though it moved lower here, why deal with all this crap? But this is, this is what it is every single day. The things we have to worry about is recognizing news. We have to recognize, time frames of day where things get a little bit more volatile. Volume profile is another great thing. There's great volume profile people out there. FT71, great at what he does. There are other great volume pro. And adding that all to the mix is great. Whatever you do is great, as long as it works for you. But adding this to it could only make it better. And that's what we talk about every single day. All right, so let's talk about stocks now. See, I got fired up today. I was very proud of how everything was working out. I'm proud of the team to put this together. Paul has been working nonstop on his office and on the site. Tight Stop's always out there posting, showing the divergences. All the other traders, Anthony in the room, always trading out. Great stuff. All right, let's talk about stocks. We're going to talk about Lockheed Martin here. I was left off on Lockheed Martin. Hopefully, Marcus, that answered your question. If you have any other questions, definitely ask them. I'm here. And I'm sure other people will help you answer those too. So let's see here. I want to just take a look at the latest. Oh, what did I just do there? Hold on, I'll be right back here. Hold on. Let's take a look at that chart. No, I didn't look at that yet. Hold on. Let me just get this out, and then I'll take a look at our tight stops chart. All right, so this was the latest HPS, Lockheed Martin. I like the wedge pattern here, and I like the candle. That was the candle was the really key here, and we had a divergence here. Now, when we talk about divergence, we talk about that lower low, the higher low, and the candle. It's 3 out of 5 indicators lining up that qualifies it for an HPS. Go a little higher, boom. Where are we here? Jesus, mother and look at that. Look where it is. I mean, it jumped right over there. It doesn't even trigger it. It's over. It's done. But what's great about this, we knew this was coming. We knew this was. Well, I didn't know it was coming, but the reason I put this out is because of that. The war in Syria now, the battle in Syria. Actually, I did this again. I ended up not showing this thing on the other chart. But look at how this thing popped from the buy signal all the way up here. I mean, that was earnings, and they increased their dividend too. I mean, that's just incredible. And you got to think going forward. You would like to say going forward we would use less and less military as we continue to advance as a people. We wouldn't need all this firepower and military and stuff, right? I mean, that's how things should be. We increase our intelligence. We don't have to worry about killing people anymore. We work together. But that's not what the world's about. We have some lunatics out there. So we looked at Lockheed Martin. All right. And they increased their dividend. Boeing had a nice pop on this off of that move. Let's start here. We're taking a look at some stocks. Now Boeing here, I wouldn't chase it at this point, but it's still a good one. We're going to jump past that. Fastenal, it continues to be one of my favorite setups. Now this almost looks like a bearish flag developing. And I don't want that to be a bearish flag. I mean, I'm not sure what I haven't been to Fastenal. I haven't interviewed their CEO and seen what their business models looks like. But what I do like here, and there's a couple of things that I like. I like this channel line. So we're on the lower part of the channel line. It's starting to grind back up. We got oversold, and we took that into the oversold level. But what was key here is that weekly time frame. Now that weekly here looks like the potential for the divergence. So we spiked down real fast low here, made a lower low on the weekly. We haven't turned back up yet. Now, if we could turn back up, that would trigger that would prove to me that the divergence was setting up. And I think, you remember, talking about weekly time frame, we would have a huge opportunity on a weekly. Now, not a big divergence. I'm not seeing any divergences back here. There was a divergence back here. All right. You see the low here, the lower low, the higher low. This is on the weekly. Now, remember, each of these candles represents a weekly candle. So you're talking 4 weeks, almost 2.5 months of upside potential here. It's a much better setup when you have that divergence lining up. Now, you had one there, and you had one here. And here you had a divergence. You got an extra week upside. Remember, whatever time frame you're dealing with, you wait for that rotation to go up on that time frame, and then you're out. Game over. Well, we haven't proven that this is divergence, but I like it as a potential divergence. And it still hasn't confirmed itself, but I would do that. Let's take a look at tight spots, tight stops, tight spot. He's in a tight spot. Where's your stuff? I don't even know. All right, so this is a great chart that tight stops here, bringing to the table here. And then we bring this one over here because I'm recording this. You can see the lines here. I mean, he's pointing out the divergences here. Great divergence. What time frame? What is this, Rob? This is 1870, so we're looking at, this is a Dow, right? Is this a Dow? 1809, what is this? This is the YM, 3-minute YM. So this is what he's been trading, posting his trades every day. Each one of these has been a trade. And you can see each one of these, upside, downside, upside, downside, upside, downside, upside, down. You want to know why this guy makes $1,000 a day? But he sticks to the rules. Sticks to the rules, understands what works, and applies it, and moves on. Simple as that. Keep an eye on tight stops in the room. $860 in the YM yesterday. Sorry, I misrepresented your profit. $860. Well, this still needs to prove itself fast and all, but I'm willing to take that shot. You know, AVB been showing great strength. I held this into earnings. I have some options in November. Going out to November on this. I held it into earnings. You know, I am a gambler in some ways, and disappointed. You know, but I saw the reversal today, and I said, "Wow, look at that candle." The potential here for a divergence is here. You know, we still might be in the money on this. I have $170 calls November 11th or 18th or something, whatever that week is, around that time frame. 170. So, you know, it's not that bad. I'd watch this one tomorrow just because of that possible divergence. Big reversal hammer midweek. We could see something from this. Now, I had a couple other ones that were setting up last week. I don't think I even mentioned. And I'm glad I didn't. Kimberly Clark here broke down. I'm not interested in that. UNP. No, that was a negative. Well, you know what? These were negatives. KMB. So this was Union Pacific was a negative divergence. So of course it broke down. What am I talking about, Johnny? I'm looking at these like I was looking at these going up to the upside. PG here. PG. Let's take a look at that. Yeah. PG also negative divergence. Had a bounce today, but we'll have to watch. I think there was earnings out on that too. So that's a couple of those that we're looking at right now. Now I'm starting to do a new research right now, and that's what this video is about. Now I'm almost 40 minutes into the video, and we're just getting to the stocks I meant to start early. But you know what? Every time we do a video, I think there's golden information on here. Absolutely golden. So I want to send this golden information video out for you. Advanced Auto Parts. Take a look at this daily here. Something interesting about it. We have a really nice pivot above that 20 line. Something that developed here off of this candle right here. So we can zoom in here a little. You can see this reversal candle. We held up pretty good. Advanced Auto Parts. Divergence here led to the upside. Was it the divergence here? Probably a little here. This reversal candle led to a nice upside move. Are we ready to circle this one? I mean, whenever we circle and we leave it, circle it because it's real time. We come back later and look at the chart. Well, yeah. We just circled this one for the first time. You know, come back in a month and tell me how this did. All right, it's up to you at this point. Biogen earnings out, I believe, tomorrow. Now I'm going to call a divergence setup on this before it even happens. Because we know what to look for, you know, a situation where we could get a gap down, but we might not take off. So we get a gap down, we see buying come in right away. This is going to turn back up. We're going to have a gap down, maybe even down to 260. You know, who knows where it's going to gap down to? Who knows if it even gaps down? You know, not one to go short Biogen because I believe in health. But we're right on that trend line. Whatever happens, it happens. But I would prefer a gap down, and I think you actually could buy that gap down on you know, I wish I did it today on the I wish I did it today on the on that friggin' AVB Avalon Bay, because You know, it was the same situation. Gap down and a ramp right back up. I think you probably get that going on with the Biogen. Now, Biogen, this is all over the place after hours. Well, we're going to take a look at what happens tomorrow if we get a gap down. You know, we'll look for that rotation back up. I probably will take that trade. All right. So that's something to watch for tomorrow. Biogen. Now from this point on, I'm going to continue to go through this. Now I'm going to pause the video here and come back when I see something, but I'll leave it. I want to restart this video because I think that's an important part here. We're talking about taking profits and how good. You know, here look at the Cabela's divergence here. Even this is even proof on the daily here. Nice divergence. We might even been, you know, that was a nice wedge pattern divergence. The wedge pattern divergence is by far one of the best setups. Now, that's after the fact, but the fact is it still does show that divergence. The fact here, this divergence is still shown here. You know, that's the thing we're trying to say. This is a Spock type of trade. You know, logical understanding of seeing it happen over and over again. Do not let these pass you by. And the hard part is finding them at the right time. That's my job. That's my job. I'm going to do that. You know, try to get that out. I do a lot of time on this show. So you don't have to. But these are, you know, even if you do it on your own, these are the setups that really work. So, and we're just talking about taking profits, and you know, and I'm working on a strategy. It's called my $20 bill strategy, and it's taking an HPS setup, or you know, it's either a tradeometer, preferably a tradeometer, Rambot 3 or 5 minute. Super signals will come in, and at that point, everything's going to be, you know, we want to automate stuff and really, you know, kind of keep everything there. But the object is to understand that our time frame is based off of whatever time frame. So if you have a nice setup here, and you have a little divergence here, and you get a move, and you get a move off of this, you get that rotation. That rotation came up into an over. Excuse me, it's not a burp there. Live on the radio. Great job, Johnny. We're starting to get overbought here. Now, you could say, or I'm just touching, I might get out a little early. You know, make sure it's at definitely at 80. Give yourself benefit of the doubt. That's why I say 2 ticks is usually good. But if you get 3 ticks out of it, 4 ticks, you know, that's where we have to work on it. I think there's a balance in the market. The market knows what most people are looking for, and it just kind of so many people want that big return, and they have that mental figure in their mind. I'm gonna get $1 out of this, or the market goes up to 3 ticks, or just underneath what your target is, and it rolls over because it knows the market is evolving. It's computerized. It's black boxes and algorithms. So it's feeding off of orders. You don't tell me that's not feeding off of orders. It is. Trend lines, divergences, momentum, and you have to be there with it. Machines can, if they're trading thousands of contracts, take 2 ticks here, 3 ticks there. They're going to be making money. If you're out there with one contract, 2 contracts, and you're saying, I'm not taking a tick or 2 ticks or 3 ticks, but what if that was the sure way of making money? What if they said, you could go on this line, you have a chance of making $100, but the odds are going to be a little bit, they're going to be much worse than standing on this line where you have a great shot of making $5. The odds of making $5 are 95%. The odds of making $100 are 20%. Well, maybe I have to, I know someone's going to do the calculus. Says, well, you know what? Over time, I should stay on that. I'm not. You know what I'm getting at, right? I'm not trying to, cause an argument between what's line to stand on. But you have to understand you have a higher chance of making more money sometimes if you take it off faster. All right. So we're about 44 minutes of the trade, and I'm still trying to get to my stocks. But I'm going to call this an epic video because I think we got a lot of good information on it. Let me set up the Zello You know what? Let me set up Zillow right now. Let me pause this one more time. Gilead and these drug stocks have been, the good thing about Gilead here I like is the pattern. The pattern here is this falling wedge pattern. I think it's very similar to the PSA pattern, another falling wedge pattern. Two separate sectors, but similar patterns. A wedge pattern typically happens inside of a channel. The lower portion of the downward channel represents the lower portion of that wedge pattern, and as you can see, the breakout tends to bring you to a measured move to the top part of the channel. Now if we go back into the what was I just looking at? Come on, people. What was I just looking at? All right, it was Gilead. It has that similar kind of a downward pattern. It's not perfect. We kind of chopped under it. And I think this one is, still in danger in front of the election. The election is tough on this. But this is way off the highs here, 123 down to 74. With the combination between the daily stochastics here rotating back up, 60 year has been choppy. But going into the election, maybe get a little bounce here. So we'll be watching this over the next couple days also. I'll restart the video here. We're looking at IBM here. We have a divergence here, IBM. We have that breakdown right here, and then we have a gap down, I believe, on earnings, and it gap down right to the lower trend line. It was a really key area down here from this pivot, and we're going to just mark that off, and we kind of push back. We didn't turn back over, but I do like IBM a lot here. I like the channel. I like the upside here potential. Hasn't really popped hard here, but I do like it. Yes, sirree, I do. So put that down on the list. That'll also be in focus. IBM, Gilead, GILD. This was the ETF, the coffee ETF. We identified this divergence, lower channel line bounce, divergence right here. Look at the move. It's pulled back. It bounced. We took it again off of these bounces. And I haven't looked at it since. And this is where it's been going. But I'm honestly, that divergence here really calling the bottom of this stock. And that bottom pivot area pushing up. This is just prime time stuff. How do you not get excited for this? That's Joe, the ETF, coffee ETF. We'll continue on with the scans here. And again, I'm going through about 200 stocks. I'm up to 105 right now. And I'm only going to bring you the important ones today. On the Kors, Michael Kors. I stayed out of this, even though I thought it was a short, but I saw a divergence here. And I said, warning, I'm not going to take that short here. And look at how it rotated back up and bounced really aggressively. There was actually some rumors of a takeover here, which is always bogus. And then, then we actually got overbought and actually pulling back. So never go against the divergence, and possibly even just take the divergence every time you see it. And we continue on with the scans here. I'll keep this thing just rolling now. I'm just going to roll through these real fast. Again, this is how I do my visual scans. Eli Lilly, interesting little reversal candle. Big volume here. Whenever you see, was there an earnings out here? Anybody can confirm that for me? I want to say there was. Eli Lilly. Big volume. Big big volume here. Big candle reversal. It happened back here. And the oversold level, it happened here. Oversold level, you saw the results from there. And possibly happening right now. I'll write it down. I'll dig a little deeper in a second. So you guys want to help me out there. Lululemon, not interested. LUV, I think earnings coming out on that tomorrow. MasterCard, I'm holding MasterCard long. I think it's a great long. We're right up against highs. Awesome long here. Yeah, I think that was today. That's what caused that. It had to be today because it was huge volume, like this one too. Now we talked about maybe a possible divergence. I haven't traded this stock ever, but you can see we actually crossed back up. We'll see how this holds. We start to move. I'm not interested. Let's move on. 3M. Ooh. Altria. Nice trend line bounce. Merck is interesting. Merck and Company, healthcare. A big reversal candle, decent volume. MRK. Yeah, LEMH here. Let's take a look at Amazon here. If you could wait just 5 minutes, let me get through the next 50 stocks real fast, and then I'm going to go to individual stocks that people are looking at. Nike here affected by Under Armour today. That might actually be an opportunity, because it's a peer play. And again, we're just looking for certain setups here. I'm not seeing anything. If we don't see the perfect setup, it's not like watching the perfect pitch. We have to do this again at least once a week. At least once a week. Go over 200 stocks of high quality subs. Here we talked about the PSA before, and I think that there is a setup here. It just hasn't popped yet, but we're going to watch this closely tomorrow. It closed on the highs. Volume has been picking up over the last couple of days. It hasn't popped yet, though, but it has a nice wedge pattern. Our measured move will be above 230 on this. I have calls that are 220 calls, November 220 calls. So, PS Price Smart here. Used to follow that one. I haven't been following it. Yeah, and that's a good point here. Tight stocks here mentioning it says instead of waiting for these swing plays and setups, you have those setups happening every 5 minutes and sometimes multiple times a day in the futures. But we're going to handle both. Not everyone's a futures trader. Not everyone's a stock trader. We have people who love to invest, which I think the divergences are best at. If we get a confirmation on Fastenal on that divergence, on that weekly divergence, I think you need to understand that. Another great weekly setup, I think, is MasterCard. The market's been selling, actually it's been going sideways, but it has, MasterCard, it's about to pop, and a pop in a big way. So, there's sometimes if you're looking at stocks that give a good return, maybe a nice dividend, there are some good setups here on the HPS setups. When we point out a divergence, it doesn't come out all the time, but maybe, once every couple of weeks we say, all right, here, this one's set up. It's a possible good divergence. Then you might say, well, let me check on my IRA. Maybe I'll just put a 50 shares in my IRA in IBM here. And then in a couple of weeks, you'll look back at it. Oh, I'm up 10%. Let me take that little profit and just wait for that next alert. That's what we want to do. Wealth, accumulation, growth. McAfee's new MGT Bitcoins. So MGT, that was a scam, right? This guy was killing people in South America. MGT is already gone. MGT Capital, right? $1.33. Oh, scam. Oh, now you got me off. What was the last stock we went over? Now I just missed everything. All right, so that's Dak here, just texting me. He's gonna come. I think he's gonna come by, and we're gonna grab something to eat after this video. So let me see here. What are we up to? So Johnson & Johnson, Coors, Kohl's, Lionsgate Films, Eli Lilly. All right, we're around here. Lululemon, Mattel, McDonald's. That's interesting. Look at the waves here in McDonald's. I mean, McDonald's pushing down the most disgusting food ever. But, you know, people are buying it, you know. People are buying it. I wouldn't eat there. You want to live to 80, I wouldn't eat at McDonald's. Mondelez coming out with earnings tomorrow. Is Ackman in this, or is it? There's one of these hedge fund guys are in this. Who's in Mondelez? Bought like a 10% stake in Mondelez. Einhorn. I think it was Einhorn. Maybe wants to get back on me on that. I like this. This used to be a Kraft. They split here, the Mondelez, and something else, Kraft. I told Dak to come over. I'll grab something to eat with him. NCR, which is National Cash Register. Remember the NCR? You always see those old cash registers, big buttons. That was National Cash Register, and that turned into NCR, and they still do things like that. And another great example of two great divergences. More proof that divergences are the Rockstar way. Bill Ackman. Tight stop. That's right. It was Bill Ackman. So Mondelez coming out tomorrow. Nike, we did that. I'm going to just jump here. I'm going to go real fast. Now, Pfizer oversold. Probably overdue for a bounce on Pfizer. But in front of the PSA, we looked at PSA. I like that PSA for tomorrow, though. Yes. That might be up on the top. Even though Fastenal is still looking pretty good once we break through that. Sam Adams beer, $1.50 bounce back down here. Wow. Here we have a double bottom divergence. Here's your low, and here's your reversal low. But look at the turn back up here. Typically, this is very strong until you get overbought. We're not overbought yet. I would say there might possibly be some more upside here. I like this. I'm going to write it down. We'll talk about it tomorrow. If you're listening tonight, then you have an update here. Oh, you know what I have to... Oh, my God. Shoot. All right. VFC here. VF Corp here. Earnings broke it down. Nothing going on there. Verizon here. It's going to be an opportunity soon. We've circled many opportunities on Verizon. Oversold, stochastic, bounce. Oversold, rotation, bounce. Oversold, rotation. Pushed back up, chopped, oversold, rotation, bounce. It's very choppy. Kind of a double top divergence, breakdown. Here we got oversold. I marked it down. Like I said, we're going to mark it down no matter what. This broke down. It marked it down, and then it broke down. It was actually a divergence, and it broke down. We're getting back down here. We're a little oversold. There's a lot of, but I'm starting to like Verizon down here. Whole Food Mart here, still chopping around. A lot of competition here. They opened up a new Whole Foods right down by the massage shop. Or I should say massage shop. That sounds really nice. Yeah. Yeah, massage shop. Massage Envy down in Closter. They opened up a Whole Foods right next door. But a lot of competition out there. They opened up a new thing called Fresh Mex here in Nyack. Fresh Mex. And it really is kind of a Latin American grocery store. They have all these exotic fruits and vegetables and nuts and olives and stuff and tons of fruit. But there's so much competition now. Trader RJC, that's... I think, with AT&T buying Time Warner, Verizon, probably is going to have to step up also. This is the future. You know, data, bandwidth, you know, media, Verizon, AT&T. I'm surprised these are not trading higher. You know, I don't know what I'm missing here. I'm surprised that Verizon is not trading at the highs. I mean, the future of things. 10 points off the highs. 10 points off the highs. All right, let's take a look at the DXCM here for tight stops. Now, daily buy divergence. It's almost setting up. We haven't, you know what? I'm seeing this kind of roll over yet. I mean, I want to see a confirmation, at least an upside, you know, turn back up. You probably had one here a little. You do have it. You know, I mean, officially you had it here. It's not doing much, though. And, you know, that brings us back to that Pfizer, which has pulled back, a nice pullback in here in Pfizer. Pfizer puts out Viagra, right? Viagra. I saw a Viagra commercial the other day, and it was a woman's Viagra commercial. I guess women can take Viagra too. Let's take a look at Comcast. No, I've never tried Viagra. I saw the commercial yesterday. I was watching something on TV. I was watching something, and all of a sudden, Viagra commercial came up. And it was like she was a nice looking Spanish black girl lady, probably 40 something, and she was going on a date with a younger man, and she was talking, and there was a Viagra commercial. I'm like, oh, all right, Viagra. And I was like thinking about it for a second. I said, I remember my cousin one time going on a date, and he says, I got the blue pill. I said, the blue pill? He goes, yeah, my friend gave me a Viagra. I said, and then he told me about it after, you know, it's like guy talk, locker room talk, which doesn't happen. So that's just a big fantasy. He was telling me, you know, it's the graphic details. Thanks for bringing up CMS. Comcast actually is a divergence. Trader RJC are bringing up Comcast. And you can see that low here and that lower low here and that divergence. Actually, this is really nice. Let's write it down. CMCSA. That's a divergence. You know, I had a little bit. Tomorrow it's going to be interesting. We had a huge volume day today. And it was down. I mean, I'm guessing it was earnings. I don't know. I can't really. No, maybe not. It just got sold. It sold off hard. It might have been some news from 65.60 to 64.50. Pretty good sell-off with some increased volume. But it does look good. Let's take a look at the earnings going into the rest of the week, though. All right, let's do that right now. What is today? Tuesday? Is today Tuesday? It's almost 9 o'clock. I might be able to actually get some gumbo today. First yawn of the day. Well, I think that's going to wrap up our market radar video. I apologize it's so long. It runs an hour and 4 minutes right now. Hour and 4 minutes. Futures at the low. But this video, if you ended up, you know, watching the whole thing and you haven't watched it before, if you're actually watching the watching the show, then you don't have to bother watching this video later. I'm going to post this and send this out. But I think this video is going to have some, you know, longevity because there's some great commentary in this. I think it's important to realize there's some great setups in this market, and it's up to you to develop that discipline and confidence to take those. That's the hard part. All right, I want to leave it off. I'm going to send this out, get this out as fast as I can. I'm going to still be on here. I'm actually going to set up the Zello, and we're going to go out to eat. Maybe I'll keep this on because, who knows what's going to happen. All right. This is DayTraderRockStar signing off on the video. I'm still on the show. DayTradingRadio.com. I'll see you guys in the market tomorrow.